Hello everyone, good evening. Welcome to another PDM session of IIA Madras chapter. So today's session is going to be on key internal controls in supply chain. And yeah, so for today's session, we have our guest speaker, Mr. Ramprasad G. So he is a cost and management accountant. He started his career as an internal auditor with Ashok Leland, Chennai in 1997. So later he has worked with L'Oreal as a finance manager, and he has joined Colgate in 2005, and he has spent around 2 decades in Colgate in various roles in finance, and currently is a director for continuous improvement group. So I think we have a very apt speaker who's going to throw us light on key controls which we need to look for in auditing SCM, supply chain management. So with no further delay, I would like to hand over the session to Ram Prasad sir. Yes, the session is yours. Thank you.
Hi everyone, good evening. Thanks for who have joined for this session. I would start my presentation in a moment. Hi everyone. Supply chain related controls is an area which Deepika had asked me, given me to speak about. So, I mean, in today's session, we'll just wait. Yeah. So I'll give you an introduction about myself and few of the audit related uh, tips which I learned in my career, and we'll go on an overview about the controls, internal controls, and I'll be touching on the fixed asset cycle. That will be the primary thing, specific one which I will be speaking on in today's session. So, thanks, Deepika, and she have already given an introduction about my journey on one. But there's a point why I have put in the Leyland stint here. So in 97, when I joined Ashok Leyland, I was a senior internal auditor. So in that particular role, when the department was headed by Mr. Mona Krishnan, so he was the DGM at that time in charge of internal audit. So one of the key aspects which I learned when I say internal audit, my learning process started in Ashok Leyland. I was a fresh graduate with just clearing out of my CMA curriculum. And I entered Ashok Leyland. The step which was, it was a very methodically done audit process. One key thing which Leyland taught me was first to approach a particular audit should be to understand what the particular area where we are having an interview with the audit team, going through the entire process which that particular department handles. And then we used to come back with our checklist. We used to prepare our own checklist. We used to identify what are the control areas which can be reviewed by us. So a very good checklist prepared is of the audit done successfully. So the key thing here is to first understand the areas, because when you go into a particular area, it may be something new to you. However, when we have that interaction with the auditing team, go through the processes which they follow, we get immense amount of information in terms of what are the areas, control areas that we may have to review in our auditing process. The first step, which I learned and which I would also like to explain here, is that where understand the entire process, identify the control areas which can be seen, the list of documents that can be reviewed. So once we have a mapping of that and prepare a checklist, the next process of executing the audit will be as smooth as possible. Yes, we would also go back to our managers to check if the list of points that we are covering in our audit is complete, it is inclusive of every single area, any gaps that may have to be covered. With our help of our managers, we used to cover that particular areas as well. So the trick, or I would say the trick in terms of doing a good internal audit, will be to understand the system, identify the process flow of the process flow as well as the document flow, identify the list of areas that needs to be reviewed, and then select your sample The sample, as usual, can be universal 100%, or it could be on a selective manner, depending on the nature of audit. Can be audit exception. Those particular thing will be something which you will, over the period of time, you'll understand, and you will also be guided by your managers in that. So this was the approach which we followed. And in today's session, when I'm taking into, because I have moved into an operational role, I would be introducing you to various, the processes that a particular control area which goes through, so that when you understand, when you listen to the process flow, you can identify some areas where you can, identify some of the checklist points like which you would like to do in your auditing process. So just moving on, I would like to have the mic open for the participants as well, so that they can also hear to them. When you look at the supply chain overview, when you look at the process of supply chain, management books generally speaks about the 5 M's, M, letter M, that are required for running a business. Can I have some participation? Team who are joined, can you, someone can mention what are the important M's that are required in the supply chain process? Okay. We have got a few responses and they are right. So let's start with it. The first M is material. We did hear this particular one. Next is men, which is your workforce. And the third important thing is your method, how this entire process of production, everything happens. And money, likely people have also mentioned about money here. And the third and the last, fifth and the last one is your machinery. The 5 M's, which we generally speak about in business, is material, men, methods, money, and machinery. So if we have to just get a step closer on the internal control, the material part is covered in inventory cycle. Inventory cycle speaks about what are the control aspects that happens in around inventory area. Men related controls, we can cover it in our HR and payroll cycle. For the methods, every organization follows a standard operating procedures. So the SOPs are put in, like for every single processes, how it has to be managed, what will be the flow, everything is captured in a SOP. And on the money part, we have something called as an expenditure cycle. And the last one, which I was mentioning about, is on the fixed asset cycle. So if you look at it, when I'm more coming in from our internal information about an organization where I'm representing currently working. So these are the 5 major cycles which in a supply chain area we cover the entire end-to-end activity under this major cycles. So if I'm to just mention on inventory cycle, we will have a checklist, internal control checklist, which we circulate it on a monthly and a quarterly basis. The team checks on some key parameters, which has been key control areas, which has been already provided to them, and they certify back. And like similar to the HR and payroll processes or the expenditure cycles and the FA cycle, we have a robust checklist which gets prepared and we circulate it to the department heads, who in turn do a self-assessment of it, and they come back with their observations about how is that particular control working. In addition to that, when the internal audit team, they go for an audit, first thing which they do is the internal audit, internal control checklist that has been submitted by the team. That will be the first document to see if the particular team has already mentioned that they are complying to the internal controls. And then when they do the review, they start identifying, sampling out on the cases, and they find the entire audit is spread across on the basis of this particular cycle, different cycles which we have. In an US organization, people would be aware of Sarbanes-Oxley, the two gentlemen who, during the Enron issue, came up with the internal audit, internal control checklist, or the SOX checklist. In this, extensively they cover various areas that can be that should be reviewed, and they split it between normal controls and key controls. So this is the entire gamut of the internal control cycles, of which the one which I have circled, fixed asset cycle, is something which I would like to cover in today's
Alexa,
session.
play Bollywood.
I think Sarvan, you can keep the mic off for others and then.
Yeah.
Set alarms, timers, and reminders with a voice command. Stay on top of workout schedule, tasks, meetings, and more. Alexa, set.
Okay, so let me continue. So in terms of the fixed assets cycle, let's do, I mean, I would like to cover end to end on the FA cycle part. So which in the process of me giving an introduction or a complete flow through of the entire process around the FA cycle, I will also be touching on some of the areas which needs to be some control areas which needs to be kept in mind when we are doing our audits. So one is a process, and subsequently you can also be having a look at some of the areas which needs to be controlled. So first and foremost is the pre-step in any organization. Before we start on fixed asset cycle, when you look at, there are certain number of processes. First and foremost is the pre-step analysis, which involves identification of why we require a particular assets to be purchased. There are certain analysis which are generally taken care of. In terms of it, which I would say is like the net present value, you will have the payback period calculations, the return of rate of return, IR, internal rate of returns. There are few analysis which an organization carries out to identify and to select a particular project over the other. So that happens to be your business, need a pre-step analysis, which I'm not covering in this particular session. However, that is the first one which goes into. Once that has been completed, we'll start with the first step, which is planning the capital expenditure project. So the first process is the planning of CEB process. Later, after a particular process has been, budget has been submitted, the next step happens to be your procurement of the assets. There are certain controls around how a particular assets needs to be procured. The next process is your installation of your asset. Then during the life of an asset, you have your usage and depreciation. During the regular course of your lifetime of your asset, you have something on repairs and maintenance. And once that particular asset's lifetime gets over, the next aspect has to be in terms of disposal of the asset. So this is the entire cycle. Let's start with the first one, which is on planning of CEB process. The first step is like in any organization will be preparation of a scope for a year. So mostly when you are looking at a calendar year, say Jan to December kind of a period, CapEx budget starts around the month of September. The project engineers from various manufacturing sites of the organization, they put forth their requirement, and that requirement can come due to purchase of an asset can come due to different reasons. I would actually like to get into that areas in detail. I wanted to have an interactive session here. However, since I think there could be some issues in the background noises, so I would only take it through. I'm not making it an interactive slide here. So first and foremost, what needs to be seen is in an organization, what happens is, why do we need a capital expenditure? So that is the first question which we need to address it. Why do we require? So the first one I was mentioning about is on saving projects. Any organization, when we are having a set of machinery, we would like to spend lesser. If some particular purchase of an asset can bring in savings to the organization, which it increases the profitability of the organization. Those are classified as savings projects. Next, every organization as an objective would like to grow their business. Anything that we require to increase our manufacturing volumes to suit our growth are certain types of assets which we procure can be classified for the purpose of growth. And when the technology is changing, when the assets are new technology assets come in, so for the improvement and for upgradations, we do replace assets. So that are the third uh, kind of classification under which we may purchase assets. Next is sustainability. Currently, the world would like to get into carbon neutral. So with solar, wind power, there are so many new systems which comes in which avoids usage of fossil fuels. So we may get into a procurement of asset due to sustainability related change. That could be another reason for getting into a capex process where we buy some assets on sustainability. Yeah. Next is during the wear and tear of an asset. Once the asset has, imagine 15 years of a lifetime, when it is close to 15 years, when it's time for replacement, we do purchase assets. So these are, in my opinion, 5 broad classifications under which an capex and asset requirement can come for a particular organization. So one more extension to this, I would like to explain here is what goes into a business organization when it comes to the reason for what will be the criteria for approval or why will I approve or how will I approve a particular project one over the another? I had just listed out here. So for a savings project, when we have multiple assets on the cards, like when we are comparing it, we look at the discounted payback period and the return on rate of return. So here what happens is we look at our investment and the average savings over a period of time. And we see on the basis of the present value of money, by what period the amount of money invested is coming back to the organization. So if there is a savings project, we look at this particular area. This is a deciding factor for approving a particular project. When it comes to sustainability, organizations have some goals, targets. So when we have some goals in mind, depending on the goal and the target, we approve on sustainability related projects. And when it comes to replacement and improvement, this goes by the business risk. If I do not replace this particular asset, there could be a risk of production loss, which will then you get into a sales loss. So replacement and improvement will be linked to risk and impact analysis. In place of expansion and new product launches, generally we work out on the incremental operating profit that this particular project will generate. So we look at, by investing so much, what will be the incremental sales and by which the margin, the profitability that this particular project brings in. And if if it is going to give us an incremental operating profit, that will be determinant of going in for a expansion of expansion projects or any new product launches. Environment, health and safety, EHS. Here it is more about risk level of any audit finding that would have come in. So if the risk level is high, so we will not be looking at the discounted payback or the incremental profit. Here, to mitigate the risk identified, we may have to go in for an asset. So this will be the factor which we will take in when we look at for any EHS related assets. And also similar to that is another area is quality. Some of the organizations have a very strict quality terms where a particular product, if it is exposed to contamination, we may have certain assets with some machineries, some laboratory equipments which are procured to ensure that the quality product is given to the end consumer. So these are few of the decision-making factors where before our approvals, any organization goes into. So going back to this particular process of CEB when I started with, so when you look at it, the particular plant project team puts forth the scope for the next whole year. What are the list of assets they would like to buy? And they classify it in that 5 major heads, which I called like savings, replacement, sustainability related. These are properly put in. The next step which comes up in this particular one is before a proposal is submitted, the team should take a tentative quote from the market, and the project scope with the cost can be put in a manner by doing a basic analysis of tentative quote. Final quotes will follow later, but this can help you kind of estimate the cost of the capex that you would like to get it from uh, before we put this proposal to the higher ups for approval. Gross savings calculation, if any, I had already mentioned. So wherever it is savings, wherever it is on risk mitigation, wherever it is on incremental profit, this will be the first step of preparation of a capex budget in any organization. Then the team puts it for the local leadership, the plant leadership team. They review and they see whether the scope, the objective is in line with whatever objective the organization has given for that particular site. So that will be the next process, next step, which is the local leadership team reviews it. Once that is done, the head office leadership team with the functional experts, finance directors, they review, they look at the cash spend details for the next whole year, the lead time, so many criticality, everything gets discussed. And organization which are like multinational organization, after the local leadership team, it does go to the division and the global team for their review and approval process, the entire process. This is the complete activity when it comes to a CEV process. Before any project gets approved, these are the steps which we get into, and obtaining tentative quote, putting forth a proper capex in proper heads with detailed out reasoning why that particular spend is required for the organization is the key for any of such CEB processes which is done. Moving on, once this is done, organizations gets a CEC number or an internal order number, they call it. So in an organization, it would be ideal to have one particular project having a number. Why? Because when the project gets kicked off and when it gets started, this CEC number will help us in terms of identifying, tracking, and ensuring the spends are happening properly only for the approved project and not being used for any other. So most of the organizations follow a CEC number concept. A particular project will have a dedicated CEC number. So the spends, capitalization, everything is tracked against that CEC number. This is the first step, which is for planning and submission of capex budget. I'm moving on to the next area, couple of areas, procurement and installation. Here, I would also be, taking a detour into some control aspects which we need to take in mind. So to start with, once this is all done, we have submitted our capex, it's approved, and we have a CEC number. Next process which business team should follow is on the commercials and the negotiations, where when we have here, along with your project and your finance team, another key team joins here, which is your procurement team. So assets procurement will have a procurement team who will also be involved in the process of obtaining the actual quotations and the negotiation. And imagine once the deal is done and then we have issued a purchase order, we have a pre-commissioning installation process that leads to implementation, and we do check on track some results before the asset is put to use. Here, from this process, I would like to move on to the few of the key controls. So again, these are the areas when we enter into a particular audit, like now, whether before a CEB was prepared, whether proper quotations, a basic level quotation were obtained, whether classification, whether the proper analysis have been conducted, can be some of the areas that can be reviewed during a particular audit. So now I'm getting into a detailed thing about what are the controls which will be there in a procurement of asset. And in a procurement process, while this particular first one is about understanding the contract requirement. About moment back, I was mentioning about involvement of the procurement team. Procurement is your purchase team. Each organization has a different name for it. Some of them call it direct procurement for materials and packing materials, which are used for your manufacturing. And they call that team as an indirect procurement team, or indirect materials are procured by a particular team. So basically, whatever the name you call it, they are the purchasing team who are responsible for having the negotiations with the vendor. So the first control here is a clear understanding should be there between the procurement team and the project engineering team, the CapEx team. So what is the requirement has to be clearly communicated. The specification of the mission, what will be the timeline when it is required, what must be the power, every aspect of it should be given. So this is the first and foremost step here in terms of the process of procurement. First one will be understanding between the CapEx team and the procurement team as to what is the material that is machine which is required to be procured. Next is whoever is there in the process of procurement, who is going to have this conversation with the vendor, must have an expertise in that particular area. So a particular engineer or someone who understands the entire process, entire understanding about that particular machinery is a very vital aspect here. Because the key to procurement is ensure that you know what you're buying. So the expertise is another area. Whoever is the person who's interacting with the vendor should have abundant information about what they are getting into. Next is the list of material. This is the RF. Basically, there is a request for quotation, which when we send across this RFQ to the vendors, what happens is it knocks off all ambiguities from the market. You have the as a same like to like kind of a quotation coming in across all vendors. So this is another key aspects of it, because we have to compare apples and not apples and oranges, right? So this is another particular key aspect when it comes to the process of which is understanding the requirement of and obtaining the quotations from the vendor. The next key process here is vendor selection and appointment. In bigger organization, you will have a separate team which is called vendor development team, who are in the process of they go understand the vendors, the potential vendors capabilities, what they can bring into the table. They have this past references. They go into the sites which this particular vendor has already performed, and only after a thorough review, a vendor needs to be empaneled into our scheme of things. And this is one is in terms of what is their capability in terms of their expertise in that particular field. Another key aspect here is the due diligence. So when you look at some of the bigger organizations, they give higher weightage on the due diligence, whether this particular company has any criminal records or have they violated any laws in the past. Because entering into a relationship with a vendor who has a darker past can also have an impact in your timelines and the delivery of your goals. Hence, next important check or the control aspect here is to do a proper due diligence before empaneling the vendor into the company's scheme of things. So these are some of the areas which needs to be, an organization should have this in the area. And when you are reviewing this particular area, whether you have to see whether these particular processes have been followed before a particular vendor has been empaneled into the organization. After here, the next thing comes your rate negotiations and the PO creation process. When we sent in the RFQs to various vendors who are participating in that particular quotation processes, the key thing here is to see a comparative quotes which comes in. And again, this process is open for frauds. And in my experience, I've seen this particular area is a area where things can get leaked, and then the organization gets impacted because of any kind of leaks in this particular area. So when we are reviewing this particular area, we need to understand who is negotiating with the vendor, whether the rates negotiation is confidential, and comparative quotes got obtained. A negotiation is a time bound activity, right? And it's not like in a day we can complete it. We give offer, there's counter offers, and it goes for multiple levels of discussions. And there could be a revision in courts. And when the courts revisions happen, it should not be verbal, it should not be a oral communication. Everything needs to be recorded. That particular process needs to be reviewed when we are doing an auditing of that particular area. We need to see it's not like whether there's a comparative quotes exist. What is the revised quote? The final rate which has been negotiated, has that been documented? Do they have a backup? Is a particular area which we need to always check. Apart from that, another particular thing which I would like to mention in this particular area is that uh, you know about the term called L1, L2. L1 is your least quoted vendor. At times, your user or the stakeholder who's going to use this particular asset might have a preferred vendor based on the past experiences, the type of machinery that we use in the past. If it is like it's going to be a feeder to already existing asset, existing machinery, they would have a preferred vendor. The preferred vendor may not be your L1 vendor, means the one who has quoted the least. In that scenario, the expectation is we may have to get a proper approval system. There must be a process where why that particular L2, the price, even if that particular vendor's cost is not the least, if we have to approve that particular purchase, why they have to be a preferred vendor needs to be properly reviewed, documented, approved with exceptions by leadership team. Ideally, the finance director and the supply chain director, they should review and they should approve it, this particular one. A very key one. So it can kind of seal off any future audit issues, audit findings. You know, why when you have a least cost, why a pricier one vendor was selected for all that one, it will be advisable to have this particular exception documented. Moving on to the next one. Once the deal is done, we have a particular one. How a purchase order needs to be raised. Here is another area where control issues can come up. I would like to explain with an example. Imagine a situation where you have to buy, say, a TV or a table. So tables come with membrane, acrylic, MDH. There are so many specifications of a wood and the finish, how it will be. Imagine if I have to buy a TV. TV will have specifications like can be an LED, OLED, LCD, inches. So if a PO gets created as TV for MD's room, TV for conference room, if that is how a PO gets created, there is more likelihood of some kind of a control lapse there, because once the goods come in, at the time of negotiation, when the quotations were received, imagine I've received for 65-inch Samsung OLED TV, which is 3 lakh. And what has got delivered is a 40-inch TV of some local made, which is not a OLED, it's a LCD, which would have at the most costed us around 50,000. So the next important control here is how a purchase order is getting prepared in an organization. It has to be very clear. It has to be detailed. What make, what model, in the sense, make in the sense which is the manufacturer, what is the model, inch details, everything should be given clearly in a view. This can apply for, this was for example, any of the assets, machinery that you buy, putting in which make, what is the machine number, the speed to be mentioned clear in the PO is another key area so that we are safeguarding the purchases properly. So this will be on area which I was mentioning in terms of rate negotiation and the PO creations. Moving on, PO has been issued. Now the vendor is starting to dispatch the material back. Few controls here which based on the experiences which we have seen, I'm calling out few of the areas. So when we are reviewing it, this is one particular area which you can review. In that cases, the requester and the receiver should not be the same person. Again, why I'm mentioning it? This can seal off any kind of nexus between the vendor and the person who is receiving the material in the organization. So the one, again, this is for your internal control. Two different pair of eyes is always better than the same person coordinating with it. And the past also be like in organizations, even the procurement team, we keep shuffling them so that a person doesn't deal with the same vendor for a prolonged length of time. After about a 2 years stint, they get changed so that that nexus doesn't get created between our internal staff and an outside vendor. So that is one particular discussion which I wanted to mention here. But otherwise, when you see on a process, the requester and the receiver should not be the same person, so that we have an additional check in terms of someone who can verify what is the material that is coming inside. I had mentioned about the RFQ. That RFQ should be available with the person who is receiving it, and the person who is going to check should have that kind of expertise to understand the RFQ. Because I have mentioned, even for instance, if you are tomorrow doing a partition workstation, you may have ordered for a Saint-Gobain glass. I'm just giving you an example here. Just a quality glass which you have ordered for. It can come, the product which can come inside can be of an unbranded nature, which you're actually creating a risk of financial fraud there by not reviewing it. So the material should be as per the RFQ. The person who's receiving should understand what was ordered and they have to review it. And as I in the earlier slide mentioned, PO description and the invoice description should be similar. Moving on, the earlier slide which I had mentioned was on some material which is very simple, direct, like I had mentioned TV or machine of this make, this particular model. It's very simple to do it. But most of the projects that goes on bigger organizations are in the nature of running bills. What I mean by running bill, it could be construction of an entire plant. It could be construction of an entire finishing in a production line, which will have multiple stages of work. The agreement with a particular vendor in these cases would be in a manner like when so much percentage of work getting completed or this much square feet of work getting closed, this percentage of the contract money needs to be released. So there is an element of technicality which needs to be reviewed before we release this money to the vendor. So in this case, it is prudent to have a consultant or a team who are neutral, who have an understanding, who will review, who will measure the work completed before releasing the payment to the vendor. So for projects which are linked to running bills, which will be a simple terminology, say running bill number 1 is like 20% of the entire project money is put up to you as a bill. In that same case, you need to have a person who can check whether that much of work has been completed. So when we are reviewing, I've tried to put forth all the areas here. When we are reviewing the control areas, we need to ensure, like all these cases, the checklist point would be, are my person who's requesting and my person who's receiving different? When the GR is being taken, how is the PO getting raised? Is it descriptive? Is it having any control labs there? When the GR is taken for running bills, whether the measurement has been done, whether they have been certified before releasing it. This could be some way of doing it in terms of procurement of asset. I'll move on to another area. The general topic which will be is what forms part of a asset value. This is another area when we are doing your audit processes, you should check that. So general understanding is your purchase price of your primary asset, and taxes, I will leave it now. Most of the plant and machineries are taxes are, you can use them as input credits, but there are some building related thing where your GST may not be applicable, so that will be in on cost. But just to understand here, what are the costs we generally can capitalize? So purchase price, the carriage invoice, the transportation cost, the handling cost, someone who's carrying the goods inside, and the cost of commissioning installation could be two different vendors. You may buy a metal machine from a particular vendor. You can have a different agency or a vendor who will be installing this particular machines. And there is a element of spend that most of the organizations spend for validation and the startup cost. Startup cost also, that the experimental materials that are used in checking whether the material machine is giving you the desired result. It could be one of this particular thing which I mentioned as a startup cost. Validation, again, you have engineers who validate whether the desired result is coming out of installing this particular machinery. And also salaries of, I mean, each company has different policies. However, this is also an acceptable practice. The supervisor, the engineer salary, if you have a time sheet, the amount of time that person is dedicated for this project can also get capitalized. So this, when you are looking at capitalization of assets, these are some areas which we can check for backups, whether appropriate spends have been booked as asset cost. So this is one particular area. Another debatable point always comes in capitalization is what is a cost which is in revenue in nature and cannot be capitalized. So this is again debatable, but any corrections done to the existing setup, like breaking a wall, the project is different, is setting up a new line. Any revenue expenses that have to do, see, while installing it, if I'm drawing a line from my transformer to this new line, is all covered. Those are required. But there could be some kind of corrections to the existing walls which we do, is again debatable. But as far as an understanding goes, it is better in the beginning of the CEB preparation, the budget preparation, we call out the revenue expenses clearly. And another thing is like also in terms of the obsolescence of the existing asset. So if I have to write off an existing asset to bring in the new one, this asset is not there anymore. So the cost involved in removing it and the loss on sale of the existing one should not be capitalized in the new asset. So some of this revenue cost don't get capitalized in the cost of the asset. So this can also be part of your review mechanism when it comes to whether revenue expenses are getting booked into the asset cost. So moving on to the MWIP or CWIP process. So one of the area is like these are major projects will run into a year or sometime into a couple of years as well. So in these cases, what are the review mechanisms will happen during a lifetime of a project? First is, in these days, what happens is you have a business services team who maintains the CWIP or the capital WIP. Some organization call it MWIP also. So the WIP ledger should be shared by your back office team to your finance team, who in turn should have a conversation with the project team on a very periodical manner. Review all the WIP ledger and see if any of the assets are ready and put to use. And also review the CEC, the project spent on a whole. I was mentioning it, right? If we have 100 rupees as the budget approved, if after we spend 80, the project got over, then there's no need to keep that MWeb or that particular CEC open in the system. So a periodical review of this can help you with list of assets that can be capitalized, list of CEC or the CWIP projects that can be closed in the system. Also something related to master data collections, classifying. In the next slide also I'll be speaking about idle assets. So all that can be reviewed on a periodical basis. This can be a monthly review process. It has to be structured. So when we go for a review, we can see whether this kind of monthly meetings do happen. So when you are having a structured monthly meetings, this helps that particular organization in that, all that open entries are being reviewed on a periodical basis by two independent teams. So this is one particular area of control, which when we review it, if it is there, it is good. Moving on to the next part, which is on the asset maintenance. The asset has been procured. We have had this conversation. We have installed. We have checked whether validated the asset is ready for use. We reviewed the capital WIP ledger. Available asset has been capitalized. Next important activity here will be in terms of tagging of the asset. So monthly or a quarterly basis, the list of assets created for the last quarter, it should be the responsibility of one of the team, maybe finance team, who can generate or prepare the asset tags and hand over to your operations team, who will kind of depending on the asset nature of whether either stick it or and engrave it. It depends on the nature of the asset. Needs to be done, and the tag should be made available. And once the capitalization happens, the depreciation should start as per the asset useful life. Most of the organizations follow certain policies for sample verification and in terms of wall-to-wall count. What I mean by wall-to-wall count is a 100% physical verification. It can be once in a year, once in 2 years, 3 years, depending on the size of the organization. So this should be clearly called out in our policy manual, standard operating procedure. They should be very clearly called out once in how many years the review should happen. So when we go for an audit, when we do our asset verification, we can check whether tags are available for all the assets, timing of tagging them in terms of the number of the years in which it was 100% of verification was conducted. All these things can be covered in the audit that we conduct. Next one, which I was mentioning, this can be linked. This can be one of this idle assets identification and classifying it can be also linked to your monthly meetings with finance and the project team. So in a bigger organization, a huge factory, you will not know the finance person who is responsible for ensuring the books are in right place, may not be aware that some assets are idle. So a connect between the finance team and the operations team and the project team is very essential to get the communication from the factory. They have to come back. You should have the process of asking the right questions in terms of whether any of these assets have been idle, not being used, because for a different day, we can have that conversation about costing where the production area related, it gets booked into the product cost. So an idle one, we generally move it out to other plant costs. It's kind of an allowance given the costing of the particular product. Hence, reviewing your idle assets on a periodical manner is very, very essential. And this, if we have it on a very periodical basis, it can help in doing your master data collection. The earlier slide I had mentioned it. Master data collections could be for movement, the location change. It could be for such cases where uh, existing asset can be classified as an idle assets. So next comes on the disposal. Till now, what we have seen is normal usage, assets procured, installed, working fine. In a lifetime, everything's gets best before date, right? After a particular time, we may have to replace them, we may have to install them. But there are certain controls which are identified in this area as well. Once we have identified some asset as idle, it is a normal practice in organizations to find if any other location requires this particular idle asset, and this asset which is not used in one particular location. They leave out for a requirement if anyone is requiring it. It's a old technology, cannot be used, it needs to be disposed. Then that particular one should go through a proper process of being reviewed and the management approving for the scrap. For that, we need to obtain a tentative quote from a vendor, could be a machinery, old machinery purchasing vendor or a scrap vendor, obtain quotations and then route it out for approval, and proper entries needs to be booked in terms of taking the revenue out from the sale of asset. That, and then ensuring the asset is completely written off and removed from your FAR, the fixed asset register. So this is the next step when it comes to it is like disposal. There are certain control aspects which can be covered during the review of assets disposed of. So till here is one cycle. However, this would be my last slide, and then we'll open up for any discussions. This particular one is the regular, during a regular course of an asset. Sometimes we may have to send the asset out for a repair or use for some reasons it may go out on a returnable gate pass. So here we need to have a proper system here. We need to understand what is the purpose of sending a particular asset out, and whoever is sending it and whoever is approving it should be a knowledgeable, and the person designated should be having an idea of why this particular thing is going out, and a proper date by when the asset will be received back should be very clearly called out. And we need to have a process, internal process, which can review all that open returnable gate passes in the system. And if there are any old outstanding gate passes, there must be a process by when people question and ask why this is lying. If there is revision in the date, like there's repairs taking time, or some for some certain reasons, there's going to be a delay. A revised returnable date has to be updated in the past, and it has to be properly documented. And that particular review is one of the area which we need to do. This is another area of lapses. Sometimes we see material once gone, they lost track of it for ages, it remains outside the books. And then when the audit comes up, then we find out there are old machineries which have gone out, which has not been returned back. So while this can be like an audit point, or it can be as an internal control area, the concerned person who is responsible will or can also be reviewing it on a periodical basis, and we can just safeguard our assets. So I think I've covered my point here. Open for any discussion, questions.
Participants, if you have any questions, you can unmute and speak, or you can put it as a chat. Yeah, we have one question, sir. Could you please talk about any physical special care to be taken in case of IT assets? We have the question from Vedant Athukuri.
Okay, so IT assets, when I will again mention them based on my experiences, one of the things which happens is IT assets could be your servers, switches, and routers and laptops. So many stuff which comes in. After post-COVID scenario, we have all the organizations. Uh, what we generally observe is that we store more assets than the requirement. So it's always like, as a backup, can we have few more, and then uh, there's a particular one. So the laptops have been issued, and the person who's using it in remote locations. So we need to have like the physical in a fixed assets in a plant. Assets are fixed, and then we can do it. IT assets are in remote locations. So how do we have controls whether serial numbers can be tracked, whether we have a Google form kind of a situation where we circulate it across the entire organization and take a control back from them as to they are holding this particular asset on this particular date. So those are some things which we have kind of rolled out in our organization. One is for physical availability of the asset. And as well as the second part is concerned in terms of the uh, what you can say optimized availability of an asset in a particular time. So over the last few years, we have seen like the backup, the buffer stock is sometimes goes to 15%, which you are paying rentals for it. It's a lease rented asset. So we are paying money for it and it will not be used. So a periodical review of physical availability and a proper comparison between what is required and what is being ordered is another area which we can do in terms of the IT assets. And also, continuity of business, there are other things, the server safety, where it has to be, data needs to be stored. That's a different discussion altogether. But that is on another area. Most of the organizations now, they're spending monies because that is their vital company data, where it gets stored, the safeguarding of it, continuity of business, all that is a separate area. So that's my point on the IT assets.
Yeah. Any other questions? Anyone else? Sir, if no other question is there, maybe just one question. Yeah, Lohita, you want to speak? You can unmute.
So one question here. So normally what happens in case of large scale capex is, normally as you have taken us through, there is a technical team that gives in a specification of what the requirement of the equipment is going to be, and there's a purchase team that handles the vendor negotiation, evaluation and all that. So at times it happens because we being accounting professionals, we do not have the capacity or the technical competency to evaluate what a technical specification is. So when it comes to large process equipments or utilities, the specs are so, they could be, the machinery could be the same thing, but the slight variation in each spec would mean a significant difference in terms of cost. So normally in your team, how do you really evaluate this? Because, the equipment name looks the same, but, the changes, a lot of changes happen internally at which we are not aware of.
So I had mentioned about in my slide on that, on the expertise part and the role of the procurement team. So procurement team, we split it among different, procurement itself as I mentioned, direct, indirect procurement. Direct procurement, they specialize in purchase of raw material, packing material that is required for production. That apart, in the indirect procurement, in bigger organization, you may procure some materials for your marketing, which could be a standees or advertisements. There's a separate team for negotiation of it. I'm just trying to give you various, different experts in the procurement part. So for machinery procurements, we need to have a person from an engineering background who has have a plant experience is always vital. And before the purchase process starts, we will have a particular, session wherein the user, the stakeholder, the plant team member, project engineer explains clearly on the requirement, the model, the specification, what power, what is it that is requirement, everything. And as you have rightly mentioned, the role of a procurement person is not only negotiation, first and foremost is understanding what is the requirement. Because as you said, a small deviation in the spec can result in a different asset coming inside. So when the RFQ is prepared before it is floated to the market, the procurement team routes it to the stakeholder, and first it is getting verified. So once you have that process, so when you go for an audit, you can just ask them, do you have as this RFQ vetted by a project engineer? So the project engineer should go through and see if the RFQ is basically your request for quote, right? When we are asking it from the market, whether that particular quotation, that particular specification clearly mentions what is required for the procurement, should be verified by one of your project engineers. And then only after that is there, we should route it. So yes, it is very important. The one who is procuring, even if they don't have expertise in that particular one, can surely address it back to the stakeholder and ask them whether the quotation which we are routing it for, is this seems okay? Is it what you are looking to purchase? So once that process is there, I think we should be good enough there that we will get into the, we'll buy the right asset.
Yeah, sure. Thank you, sir. Deepika, can I add one more point in inventory management? Somebody has
Yeah.
posted, sir, because very recently we finished out one of our IT inventory audits. So considering organizations today, we have laptops and desktops working in a lot of remote locations globally also. Now that now most large companies have IIT softwares. So these are basically called IT infrastructure libraries. So these maintain an inventory of all assets. So these tools basically have network management inbuilt tools. So it's like a data packet is sent across a particular host. And if the host replies, it means that a device is in the particular company's LAN. This is one of the procedures which we had adopted, because physically verifying is not practically possible, though maybe they have a long-term physical verification policy or a running over a period of 3 years or 4 years or whatever, depending upon the organization. As an auditor, we would use a simple network management tools to test whether the host is running and up. One more inherent limitation is, if at a given point of time during the course of audit, if the system is down, this will not give a result. So what you can do is, when you have Windows-based server systems and all, there are n number of other SIEM tools that today for cyber security risks and all organizations use to monitor. So a lot of data is being monitored over a period of time. So you can the previous day's date log or something could be analyzed in case a given host is not up at a given point in time. Yeah, this is all.
Thank you.
Yeah.
Thank you. And one more, just to add to that point.
Yes.
Again, what you have mentioned is what is one part of it. And another one is on the local applications. So these days, organizations purchase a lot of applications for their different use. Like a marketing team may buy a Nielsen related one to track the market, and there could be some other department requiring some other application. Could be a distribution related, a handheld device, or a WMS. There are so many applications which are also purchased. So in larger organization, what do they also do? There is a CyberX team, a global team, through which all the application requests are routed. And before onboarding, like how you do the onboarding of your machinery vendor, in case of your software vendors also, there is a CyberX team who review, they have a parameter checks, they do all that parameter checks, and then once they are thoroughly done, only then they will onboard it. And they do have a periodical verification of this tools which are available, the application tools that are available. So on a basis, they send across and they see the usage, and they send a note also, they send a usage note. They say, like, in the last 1 year, you had 20 user access requirement, of which only 5 have been using it, 15 have not been using it. Rework on based on your licenses, because there's a money which is being paid against the number of licenses. So that's another area which the IT related audit team does do a very periodical review in terms of, one, availability of the such apps and applications, and also in terms of usage, periodical usage.
I think that question is answered. Any other question?
Here is another question by a participant, Vedant Athuri. I will read the question. In most of the cases, I observed that asset is received, approved, certified by the project engineer about meeting requirements who is a requester. Based on his approval, GR is passed by accounting team. So as you told, requester is the approver in this case. What control can be implemented here? Can you please answer this, sir?
This is a very important question, and as I mentioned, I had multiple roles in this organization. Before I became a director for supply chain, I had been an audit, and I had seen frauds happen in this particular area. Over a period of time, there is an excess which can get created between the project engineer and the vendor who supplies the machinery, and there could be certain frauds which can happen. So and we have seen things happen also in the past. So it's a very gray area. Only way it can be kind of fixed is when you have a surprise checks performed with the help of finance plus an operation person. So that's the reason why even I maintained it. I did not openly call it out, but that's a vulnerable area. There could be frauds happening in that particular area because the one who's requested is also the one who's certifying it. That's the reason why I said the GR person should be different. In that scenario, see, finance professionals are, if you say, may not be engineer, they are not technically sound, but they have the prudence. They can take a person from another engineering person along with it as a surprise check, and they need to do that check quite often. A surprise check should be done. So maybe as an innocent question, you can ask, what is this particular one? Is this matching with? So when you exhibit this particular action of surprise checks and asking few relevant questions, it will give a particular thing in the minds of the one who's getting into this particular one. Yes, all the goods received are subject to review, and there could be some questions which can come in, and not a finance person, someone who's technical can also be present at the time of checking the goods. So this is very vital, and it depends upon each organization's manpower availability, expertise. But I would, if you feel in any way, any area that you organize in your organization or where you find it is not there, it should be part of your recommendation that a finance person should do a surprise verification periodically. Second, they should take the support of someone technical who has been in rotation. That's why I said about rotation of jobs. Project engineer should not be there for 10 years, 15 years. There should be a rotation of job. And in that case, someone who has handled that particular role earlier should be the right person to go in along with the finance person to review on a sample basis, on a surprise checks. That is very, very vital. I totally appreciate that particular point. Yeah, it's a gray area. The amount of time that you spend, the amount of things which you kind of exhibit on a periodical basis will only plug in such kind of nexus which can get created over a period of time.
Yeah, any other question? Yeah, if
Paul has raised.
yes.
Question, one of the M's is on measurement, both qualitative and the quantitative. So can you throw some light on the qualitative measurement in a supply chain, sir?
Okay, so that is, in this one, I have only mentioned about the method, but generally on measurement quality, what happens is in supply chain when this is on the quality of material which comes in. So this is not related to FAI. I believe your question is about the material quality, right?
Sir, actually, it's more on what the textbook says, more on customer satisfaction I mean, complying with certain things which makes the government happy, the people happy, the customers happy. In supply chain, how do we measure external parameters?
So it's a very wide question. Let me start with the beginning, which is when we are buying material. So when you are supplying a finished good to your consumer, customer is only your stockist. Consumer is the end person who's actually consuming your product. So consumer satisfaction is very easily, parameters are in existence. We have the toll-free numbers, we get the consumer complaints, and you have a team which handles it where issues are, that is the end product. But the start is when we are purchasing materials from the market, when we have a supplier network, first and foremost, we request is self-certification, certificate of origin. In that, we ensure the suppliers first and foremost checks in this godown before the goods are dispatched, that agreed parameters are checked, and then they are sent to the our location. And when we receive it, we would have a checklist which will have parameters like whether the certificate exists, and then a sample is removed and it is sent to a lab. This particular product will be in blocked stock condition till your quality teams reviews it and gives a clearance of all the parameters, agreed parameters have been verified and found okay. Only after they have the controls to release the stock from block to open, only then that particular product gets into the production. So that is the first level of control. Receiving the product itself, we have a control. The next level, which I was mentioning, is all through we have line control, line quality to check. And in the FG, each batch, one sample will be retained and it is checked and cleared. So this is end to end. From the beginning to end, we need to have a robust checking process in place, which will be at receiving, at the time of line in the sense in the production process, and before dispatch. And compliance to government thing is another wide area which is not negotiable. We need to have, like, I'm coming from Colgate, it's under FDA. When some of those things are, people use it in the mouth, so any kind of contamination is not at all acceptable. So nothing is negotiable here. Quality at every single place in the process is essential, and it is not negotiable. We need to have proper controls, and we do have some 56 controls in quality. And if you are working in the plant, even if you are a finance person, you have some mandatory training sessions to go through, because quality is always your primary. Once you lose trust on your consumer, then you may be nowhere. Few cases like Maggie sometime past, or Cadbury's a decade back, were few examples just to quote it. So quality is must, and at every single level there must be a checklist, and they should do a review and ensure the compliance with the government is also met.
Thank you, sir. Thank you so much.
If there are no further questions, yeah, anyone else? Okay, sir. I think we have answered all the questions. So if there are no further questions, I think we can call it a day. Thank you very much, sir, for spending your valuable time with us and patiently staying with us and answering all our participants' queries. Thank you very much. We look forward to meeting you in our future seminars and conferences, etc. Thank you for being part of IIA Madras chapter. Thank you all the participants for staying till the end. Thank you very much. See you in another session. Thank you. Good night.
One word from my
Yes,
side.
yes,
I would
please.
like to
Yes,
thank
yes.
for giving me this opportunity. It was nice connecting with so many people, and then getting an opportunity to interact with bright minds in the field. We go doing our regular routine activities. Such interactions gives us an opportunity to share what we know, and we as a society, as a fraternity or facilitators, we facilitate learning process. So when we get such an opportunity, we always cherish such things so that, we can mention, maybe if you take back 5 to 10% of what I have mentioned in the whole session, I would be very much happier that I have made some change. I have been productive in terms of bringing in some knowledge. So when I would be very, very happy to be part of this particular webinar and explaining and interacting with you people. Thank you once again, Deepika and the entire chapter for giving me this opportunity.
Yeah, thank you. Thank you
All
very
the
much.
best.
Thank you. Thank you, everyone.